Hello and welcome to the stock market analysis. Let's take a look at MicroStrategy. This is the daily chart, and yesterday it gapped up higher but closed a bit lower at touching the rising 20 MA. Now at this moment I would like to say that the stock has actually made a new high here, but at this moment it is not able to move above here yet. You have to be very careful in this kind of situation, because if the stock fails to make a higher high that is above this old highs here, then this might be the start of a correction in the stock. Let's say it goes a bit higher here and stops here and then it declines. What might happen is that the stock may be forming a head and shoulders pattern. Okay, let me just draw it for you to see so that you can be able to picture it. At this moment, it hasn't formed yet, but as good traders, good technicians, we must anticipate. Okay, so why is a head and shoulders pattern so significant? Because if it reaches here and it doesn't make another new high, the uptrend is finished. It might trade sideways, or worse, it might correct and fall down. Now, in the event that a head and shoulders pattern form, there's a possibility that it might drop to the rising 50 MA. So that's something for us to consider and think about. Let's take a look at the hourly chart right now. So far, the stock has not dropped below the rising 60-minute 200 MA yet, so we don't want to pass judgment so early. Usually when the stock is still above the 60-minute 200 MA, there can still be possible bullish reversals and making new highs. So at this moment, that let's not pass judgment too early. Maybe you can draw a trend line here and see if MSTR is trading above this uptrend line at this moment. If it's able to stay above this uptrend line, then yes, maybe it can go back up. But if it drops below this uptrend line and below the 200 MA, you have to be very, very careful about it. 15-minute chart yesterday showed us that it actually gapped up, but it hit the 200 MA, found resistance there, and that is why it collapsed. You can see that the stock broke below this trend line here, this support area. Then it tried to move back out and just dropped throughout the end of the day because of the negative sentiment in the market. The market, I think S&P 500 was down about 1%, if I'm not mistaken. So you can see the stock dropping, making lower highs here, and of course sell off now, a bearish cross here. And again, it's below the 5-minute 200 MA. Usually you do not want to long the stock anymore if it's below the 200 MA. You can see when it's below 200 MA, don't touch the stock. Only when it goes back up to 200 MA, then you can touch the stock. Weekly chart, you can see that it's indecision in the stock right now. This is called doji, and we are towards the end of the trading week. So if a doji forms, it's really an indecision in the part of market participants. And when things are undecided, you don't need to do anything. Just stay on the sidelines. So I hope this analysis has been helpful to you. Do like if it's helpful, and subscribe to my channel, and see you in the next one.